how many? Oh, 42 years. So we are very great that we are publishing this annual review of Islamic finance for our in our program. So we are hoping that from here we can publish more books or journal in banking. So we are thinking of how to get together to work with MAS or NUS, NTU to launch more journals and books in this area. Thank you very much.
Okay, for those online, we have a simple program after the segments. We have a Q&A segment. For those online, you can actually type your question, and then my colleague will collate, and then we can, at the end, we will have the Q&A session. Okay, now we'd like to call upon Professor Belal. Okay, he will talk about the journal's mission and mission. Okay, Prof. Belal.
Professor K.K. Phua, Chairman World Scientific, honored guests, friends, ladies and gentlemen. With a pleasure to participate in the great undertakings that World Scientific has done over the last 40 years. So can I have my slides, please? Okay, next.
Next.
Yeah, I can't control the slides, so I have to realize.
See next, then you will.
Yeah, next. So here is a little background to my admiration of Professor K.K. Phua. I was part of the first launch of the first journal of World Scientific way back in '85. And since then, I've seen, World Scientific really take off. In particular, it's the visionary leadership of K.K. Phua, which has created this amazing publishing enterprise, and he is constantly enhancing and enlarging the scope of World Scientific. And I'm glad he has reached Islamic finance as well, starting from physics, theoretical physics, a long journey. It was a great journey. So now we are at the threshold of a new journal, Annual Reviews of Islamic Finance. This journal is actually very timely because Islamic finance is growing. And besides growing, there are a number of important issues that need to be addressed to foster and sustain this growth. And so I will discuss them and then propose some solutions. I'm supposed to talk again with some instruments of Islamic finance where I'll propose some solutions. But for now, opportune time to launch this journal. Next slide, please. So just to give you a summary, what is Islamic finance and how does it differ from conventional finance? The purpose of Islamic finance is to raise capital for the real economy, not for speculation, not for gambling on the stock market or wherever. And the real economy is supposed to serve the common good. The real economy is not supposed to be run for making profit. The fundamental point of Islamic economics that people forget. An enterprise's purpose is not profit. It's to provide livelihood for the people. In that process, you can have your returns and make profit. That's a secondary issue. Profit is not forbidden, not the purpose of production. So that's the fundamental point of departure of capital. Okay, it serves the common good, number one. Number two, this is, I have to give you the background. The central idea of Islamic finance, we call maqasid the Sharia. Maqasid simply comes from the word maqsad, which means purpose. So what is the purpose of Islamic finance? Purpose is to have justice and fair play in all the Islamic transactions. Okay, that's the purpose of creating the Sharia, means the law for the Islamic transactions. So it was then realized by the scholars that interest rate, riba, and lack of transparency, gharar, are the two instruments which mitigate against fair play and justice. the long story behind it. So this is the, I would say, a milestone conclusion, because the moment you say no interest rate, the entire $500 trillion financial superstructure of the world is on one side, and you're on the other side. So I'll address that, because whether this difference is clear or not is really now for contention. So that is the background for this. So one of the fundamental instruments of injustice in the view of Islamic finance is interest rate, riba, okay? Profit is allowed. In fact, it's completely halal, if we say allowed, but profit, all Islamic instruments must be based on the principle of profit and risk sharing. So you may be mystified, profit, risk sharing, I mean, how do these things come together? So in my second talk, I will actually give you a mathematical expression and representation of these ideas. It's not just empty talk. They're profound ideas which have quantitative and mathematical implications, and which in our view has not been fulfilled in the Islamic financing practice today. It is one of our main contention. Okay, next, please. So there has been great success of Islamic finance. Islamic financial assets are now valued at more than 3.8, hitting $4 trillion soon. So the huge amount of assets, of course, compared to the world, financial architecture is small, but intrinsically it's huge. Great success in social finance, zakat, waqf, which are Islamic terms for charity and poverty alleviation, have been very successful using Islamic financial instruments. There has been tremendous amounts of work done in the greener halal economy, again, about $1.5 trillion worth. Then there's been also another more theoretical aspect of Islamic finance, that the sustainable goals proclaimed by the UN in sync with the principle of Islamic finance. So the principle of Islamic finance have also been accepted as basis of fair play and justice in the worldwide context of the UN. So these are the success. That's the good news. Now for some bad news. Okay, here are the shortcomings of Islamic finance, which are quite serious. Okay, next, please. What is the main shortcoming? The main shortcoming of Islamic finance is the instruments to realize profit and risk sharing have not been developed. A huge glaring black hole staring us in the face. And I'll tell you why this is not being addressed also, ironically, okay? In our view, the main shortcoming is in the banking and the capital market sector. As I said, success is in the social finance sector, which is towards charity and poverty alleviation. So almost all banks claiming to be Islamic have instruments based on interest rates without fail. And I'm saying it, quite confidently. Almost all all Islamic instruments in the capital markets are also finally, you'll be seeing, rooted on interest rates. Same thing is going on. So since the principal function of Islamic finance is to raise capital for the real economy based on risk sharing and profit sharing, these shortcomings need to be addressed quite urgently. They're not some small shortcomings at the margins of Islamic finance. They are the center of the field, and these are not being addressed. Next slide, please. I better reposition myself. Okay, so why did this turn of events take place? Yeah, thank you. Then I can stand there. Okay. Why did this turn of event take place? Thank you. Well, it's ironical, right? Because, as you say, I mean, morning shows the day. So when 40 years ago, Islamic finance started, it was obviously a new undertaking. So the view of the scholars was that let's start with modifying conventional existing instruments. And as time goes on, there was an expectation that when Islamic finance becomes big enough, we would have our own instruments. So happily enough, conventional instruments were adopted, adapted, modified. But what we have seen now is that this transition is not taking place. Instead, we are now in the danger of being completely overwhelmed and subsumed by the replicas of conventional finance. Okay, this is the bottom line. I mean, I can wax eloquent about how great stuff that we have done, but to me, that is the socialist side, poverty alleviation and social finance. But the real capital market and the raising of capital, which to me is the fundamental base of finance, is not being addressed properly. Next, please. There's another strange phenomena that, I was, in 5 years in Malaysia with the Institute of Islamic Finance, called NCF, and I experienced a strange phenomena. There's phenomenon of complacency. So you can ask me, what do you mean by complacency? Well, here's what I mean. When you talk to Islamic scholars on Islamic finance, they are absolutely happy with the way things are. Why? Because Islamic finance was successful. So they're saying, well, everything is fine. What's the problem? We're doing things and we're extending, we're getting bigger and bigger. Islamic banks, completely complacent. In fact, without names being mentioned, I asked the CEO of an Islamic bank in Malaysia, I said, aren't you concerned about fixed coupon bonds, interest-based instruments? All of your instruments are interest-based. He laughed. He said, Prof, don't waste your time. We are making money. We are happy. We have bonuses. Our investors are happy because these instruments are hedged and priced by Wall Street. So what's the problem? We're not going to change. Don't waste your time. He's completely blunt about it. And, my colleagues in Malaysia know this. I'm not making this up. So it's tremendous complacency that, we, of course, they're making money and the field is growing, certainly. But on what basis? In my view, on incorrect basis. So I asked, then, we were a leading scholar of Islamic finance at a very high academic position. I asked him, Prof, aren't you worried that these are really not Sharia-based? They have interest rates embedded in instruments? He said, forget it. These are all approved by Sharia board. We're not off the hook. If Sharia board approved, we're fine. So then the question comes, how come Sharia board approves of these things? And I'll discuss this in my next lecture, okay? So the problem with Sharia board, and this is those who are experts in this field, the Sharia board is essentially takes contracts which have been evolved 1,000 years ago for non-interest based assets, and they adapt these instruments to the 21st century. So they break down, say, a fixed coupon bond into various transactions. Each transaction piece field is Sharia compliant. Then they say, well, it's called deontology. They say the process is correct, the result is guaranteed because the process is correct. That's the logic they use to tell you how this is being carried out, okay? So it's not that easy to go in there and change anything, okay? Next, please. So Islamic finance and debt markets, okay, over 90% of Sukuk, which is Islamic bond, is the main instrument of Islamic finance, is based on interest rates. I will give you some evidence of it in the next time I speak. I have a lecture later on. The cash flows and hedging of Islamic capital market instruments, all based on conventional finance. You see, when you hedge something, of course, you have some mathematical models based on instruments which you have to use, like forward interest rates, short selling. Various institutions are used, and all of these are based on the existing practices in Wall Street. So, for example, the Sukuk market in 2021 was about $800 billion. It's a small amount compared to the world debt market. It's less than 1%. Without its own instruments, Islamic finance had the danger of being absorbed and disappearing into interest-based international finance. This is my biggest concern. It's too small to survive unless it has its own underpinning, which is distinct from mainstream finance. So in our view, in addition to complacency and success and all that, in our view, another fundamental reason for the problem with Islamic finance is because Islamic finance lacks mathematical models which encode profit and risk sharing. And I'll show you why. These models are very complicated. They're much more complicated than conventional bonds and conventional finance. But this is another bottleneck. One bottleneck is that things are status quo, people are happy. The other bottleneck is that the solutions are also not easy. And unfortunately, that has been holding us back. There's also a problem of regulatory framework. How do you price and how do you actually monitor profit and risk sharing instruments? And lastly, which I realized with talking to people in the banking sector, that both the issuers of Islamic debt and the investors both need to be educated on the nature of these instruments so that they have the confidence to take a position with a new instrument, which is not conventional finance. So all of these bottlenecks are facing us. Next, please. So I've outlined this in the journal that we're launching. As I said, it's opportune and timely because we hope to address these really important issues. There's not just another journal to be floated with another sort of run-of-the-mill idea. This is really required. And if it takes off, it has impact, which is significant. So I've outlined this to show you that mathematical modeling, simulations, empirical analysis, this is to me the backbone of any real effort to revitalize Islamic finance. Next, please. So let me summarize this by the vision.
Sure, the Dr. Saad. Oh, maybe you can flash Dr. Saad's. Yeah. Is it? Okay. Thank you. Okay, thank you, Prof. Belal. Thank you, Dr. Phua. Okay. Okay, now I'll call Dr. Eskandar. I'd like now to invite Dr. Eskandar, who came all the way from Qatar, to the podium to give a summary of the journal's inaugural issue. Dr. Eskandar. You need to be roving or stagnant? Setting.
I just. Okay. Good afternoon, good evening, everyone, or good morning, I guess, in a different part of the world. Assalamualaikum warahmatullahi wabarakatuh. So, thank you so much. First to Badr Raimi for arranging a sessions in such a way that I can join. I traveled to Indonesia, then, it was quite close. Then I decided that, rather than joining in Zoom, I to come in person to witness the launch of this journal. I also want to thank Dr. KK Po as well for giving us this opportunity. When Prof Belal contacted me, I think about 2 years ago, or about 1.5 years ago, said, do you want to become an editor of this journal? We need younger bloods, So first, I said, okay, I'll do it with Dr. Saad. Then after a while, I said, Prof Belal, this is a bit too difficult. So we need you. So then he also kind enough to become one of the editors in chief. So Alhamdulillah, with 3 of us, we managed to produce the first annual review of Islamic finance. And this thing will not materialize without the support, obviously, from Badr Raimi. I think his dedication and making sure that we're able to put all the papers together lead to this first inaugural, or basically inaugural issues. So my job, my job is quite simple. I don't have to tell why we are launching this journal. I think Prof Belal has done a good job. But I just want to reiterate this point. A lot of people might think Islamic finance have a very small role to play. But I guess the world is waking up to more and more crises. I think the West is having a big issues also. It's just non-stop, from global financial crisis to climate crisis to inequality, for example. And a lot of people, they do not know this. I recently traveled to DC, and amazingly, in front of the White House, there is a big camp of homeless people. Then I said, this is the face of capitalism. You see a very rich, people at the same time on the front of the face. You also see homeless society as well. So, the idea that we have, I talked to Prof Belal and Dr. Saad a lot. The idea is not to change the whole system. The idea is not to, revolutionize and to come up with a completely a radical thinking. Our ideas is to really highlight some of the gaps, some of the fallacies of the model, and really try to basically shed light and bring some new perspective and new narrative. And this is what this journal is all about. It's a story of the past, and it's also a narrative about the future. And we think, with the support of Dr. KK Phua and World Scientific and a lot of learned scholars, we can achieve this thing, inshallah. And we also planning to host our first symposium/conference in this hall itself, to bring the top scholars in Islamic finance and maybe conventional finance to have a serious discussion about what we can do together so that the world would be a better place for everyone. I think not many people know this. I guess many people know, but it's worth highlighting the same thing again. If you allow me, Brother Raimi, how long I have? 5 minutes? Right, okay. I just want to keep talking a bit because my sister is on her way, so I want her to see I'm talking. So she got stuck in traffic. But anyway, just a joke aside. So I think many people know this. When I was young, they said, you can put everyone in the plane and they own, let's say, 50% of the wealth. So as you get older, then the plane become a bus. And then the bus become like a small coaster bus. Now you can put, let's say, about 10 rich people in this world, and they probably own like 50% of the wealth. And this is the world that we have created. So much values, but the value seems to be concentrated in the hands of very few people. And I think this is not a phenomena only in Malaysia or Indonesia. I think it's everywhere. I think in Singapore too. Everyone is also talk about high inequality. And let's not just focus on inequality. Let's focus on climate, our biggest enemy right now. And And without responsible finance, or without even Islamic finance pushing for more fair agenda, I think people might feel that this climate agenda may not be that relevant. So that's what we came out with this journal. And Dr. Belal has really pointed out that instead of just rehashing the old idea, we want to bring a new perspective. I think that's the outcome of this first issue. So we have a bigger vision, and we have a great team, and hopefully we can actually contribute to that. I first came to Singapore 10 years ago, in 2013. I think His Excellency was kind enough to invite some of us from Malaysia to really speak about this vision about Islamic finance. People might think, why Singapore want to do Islamic finance, or maybe why they even should consider. This is not just about an agenda for the Muslim world. I think we are just talking about how we can play a role in the global market. So that's what we are trying to talk about. And even from dollar perspective, Islamic finance is going to hit 5 trillion in next 2 years, and the growth is going to be exponential. I think everybody knows this, that the Muslim population is about 2 billion, and right now our market share of GDP is only about 7%. So when the market share of Muslim economies is growing, and obviously Islamic finance is going to grow with that. So even you just talk from monetary perspective, I think Islamic finance got a lot of potential. So with that, let me just introduce this journal. We have 11 papers in total for the first issue. The beauty about this journal is that we have 4 sections. We have research articles, we have comments, we also have review articles, and we also have case studies. And so probably if you browse through this journal, you realize that many of these journal articles are also published by us. You see Prof. Belal name, you see Saad's name, you also see my name. And maybe you think that, we are just pushing ourselves through this journal. No, that's not the main reason. The main reason is that because we want to set the right tone. I think people who read this journal knows that our narrative going to be different, and we choose to be different. Right? Not that we are discounting all the knowledge that been contributed in the past, but what we are saying is that we need some fresh perspective so that the idea would be better. At the same time, we also have section for young scholars. So we also have selected 2-3 new articles from young people to give them the opportunity to publish, to be part of this, and all these ideas eventually will converge, and this idea will try to enlighten some of the problems and the situation that we are in. I'm so happy to conclude. I'm so happy to be part of this adventure together with my guru, my mentor, Professor Belal, and I also honored to see Dr. K.K. Phua. Dr. Belal has spoke so much about him, the vision and the great things when I was in Malaysia. And he said, Iskandar, you must meet Dr. K.K. Phua. So finally today I got this honor to meet, such a visionary person. And we hope that, this partnership between us and also World Scientific will bring not only Islamic finance, but also some of the solutions which are required for the humanity to live in a better world. With that, thank you so much. Assalamualaikum.
Thank you, Dr. Eskandar. Okay, now we are getting ready to for Dr. Saad, live from Lahore, Pakistan. We shall wait for a few minutes for them to transfer the.
Do you want me to share my screen, or do you want to load the presentation?
Yes, you can share. Yes.
Okay. You'll have to give me the rights to share.
Okay, Dr. Saad will talk about the significance of Islamic finance.
Okay, so, great, thanks. So, can you see the slides?
Yes, yes.
Okay, great. Thank you very much for giving me the opportunity to speak. I really miss not being there. Looking at the excellent ceremony that I can see, and my good friends, all of them are there. So, I'm really missing out on not being able to attend in person. And I really look forward to attend our symposium and conference that's going to happen, inshallah, very soon. My sincere thanks to Dr. K.K. Phua and the World Scientific for giving us the opportunity to launch this journal. My sincere thanks to my two co-editors-in-chief, Professor Belal and Dr. Eskandar, for working on this first issue. It takes, trust me, it takes a lot of effort for the issue to come out. And there's a lot of work that has gone into the first issue. There's a lot of effort that has gone into the first issue. And the idea is that hopefully this effort can bear fruit and good and strong ideas related to Islamic finance can come to the forefront. I'm also thankful to Brother Aimi for organizing this and managing it, managing the editorial processes. So let me talk about this article, which is basically the editor's article, Islamic Finance Search for Meaning. This article I've been wanting to write for a very long time, but I really thought that who is going to publish this article if I write it? Because people, I felt that the current space of journal articles expect the articles to be in a specific way. So any original ideas or any particular voices, unless that they are presented in a particular way, the likelihood is very great that they will not be accepted. And I'm pretty sure that unless, that this article would not get accepted, so hence we thought that we will write an article for our journal to set the tone. So this article, Islamic Finance's Search for Meaning, is the editor's article that will go at the start of the journal. Now, in this article, we have talked about the dilemma that Islamic finance industry has experienced over the last few decades. And at the core of this article, we would like to highlight that there is much to celebrate about the Islamic finance industry. And at the same time, there are areas of concern that need addressing. So that is at the core of this article. At the same time, we are trying to highlight that the meaning generating process that Islamic finance industry has experienced over the years, because this industry did not start purely as a market opportunity. It started because there were people who believed in the idea of Islamic finance. And there were people for whom Islamic finance was meaningful. It wasn't purely from a market perspective, neither was it from a regulatory perspective. This industry started because people found Islamic finance meaningful. So that's how and how does this meaning that people generate from Islamic finance, how that has changed, and to what extent does this meaning still continue to hold? That is something that this article wants to, is trying to highlight. Now, to begin with, even after 4 decades or 5 decades of Islamic finance, still, whenever the name Islamic finance is mentioned, there's a lot of uncomfortable feelings in the audience. So there are people who believe that it's the same thing, and there are others who believe that it is completely new. So you feel a lot of, and I've been teaching Islamic finance for more than 10 years now. And this uncomfortable feeling, and I've been working with banks, Islamic banks, and I still see this uncomfortable feeling in academia, in industry, among students. And we wanted to address this uncomfortable feeling as well through the support of this journal. Now, let's start with the quick history of Islamic finance and how the meaning generating process started. So if you go back into the earlier articles and books that were published, there was a lot of emphasis on maqasidul sharia, or the purpose of Islamic law and purpose of sharia. Now, in that literature which emerged in the 1950s to 1990s, the focus was always Islamic finance was juxtaposed against capitalism and communism. And the idea was that somehow it would improve on the challenges experienced by both. And this was the purpose of the literature that we saw in 1950s and 1990s. At that time, people who were working in the Islamic finance industry, that they felt that Islamic finance or Islamic economics more broadly can offer a better way. Now, the feeling that there is a better way available generated a lot of meaning for these group of scholars who, and some of them I know personally, spent their entire lives teaching and discussing Islamic finance with the hope that it offered a better solution to humanity at large, that somehow it was able to solve the problems that the prevalent systems at that time experienced. So this was, and this is how the literature evolved in that era. And if you still meet them, you'll find that the kind of passion and excitement that they carried was palpable, was contagious in many ways. Now, then came the issue that, people in the 1990s started to experiment with different models of Islamic finance. And there, a group of Sharia advisors arose who felt that we can create a practical system. Rather than simply talking about a theoretical system, let's create a practical system. And in creating a practical system, they felt that if we can generate a system which is deontologically correct, or if we can generate an institution which is deontologically correct, meaning that the means that those instruments and institutions are following comply with Islamic law and with Sharia, then that would mean that the instrument and the institution is Sharia compliant. So they believed in the idea that means are as important as the end. And they developed a system based on that. Now, trust me on this. Now, the rigor in a deontological process never emerges from the consequences. The rigor of any deontological process, and this is true for Islamic law, and this is true for other deontological practices as well. If you speak to serious theorists of deontological ethics, they would argue very clearly that the rigor of a deontological process emerges from the fact that the process is compliant with the underlying principle or with an underlying system of deontology. And this is how this mindset was developed, that as long as the process is complied with Islamic law, then it is rigorous and it is technically correct and it is Sharia compliant. So they paid very little attention to the consequences of the process, and that is perfectly fine. That's the nature of the system. That's the nature of deontological ethics, right? That you focus on the process. And based on that, the current version of Islamic finance is anchored into the idea of deontological ethics. Now, interestingly, the idea of consequentialist, a lot of academics, and some of them are in the audience today, they believed very strongly that while deontology is important, but so are consequences. And in this, so from this emerged the idea of risk sharing as a consequentialist approach to define the nature of Islamic finance. Because these group of academics argued that risk sharing principles are deontologically sound, at the same time they offer better consequences. While deontologists also argued that compared to no deontology, some deontology is better, they also agreed that if we add deontology and consequences together, then it would be much better than pure deontology alone. Now, mind you, organically, if you look at Maqasid al-Sharia, intentions, deontology, and consequentials should emerge organically. But if they're not emerging organically, then at least one aspect of it becomes, and if one aspect emerges on its own, then it's much better than none of it emerging. So that's the mindset. But in risk sharing, there were two aspects emerging together. Deontology was solid, but so was the consequentialist ideas that the theory of risk sharing was proposing. So this was the time when there's a lot of work on risk sharing that emerged, and it still continues to emerge. I've been part of that group of literature as well, where we have argued how risk sharing is important from an Islamic finance perspective. The challenge with risk sharing is it struggled to meet the market test, in the sense that we did not see any risk sharing instruments, or I should be saying any, but many risk sharing instruments emerging in the market. So hence, risk sharing lost its bite slightly in the literature as as the Islamic finance industry emerged based on strong principles on deontology. Now, if you look at the current state of the Islamic finance industry, there's a lot of success that the industry has experienced. Right now, as I speak, the biggest Islamic bank in Pakistan this year has emerged as the most profitable bank in the country, not just most profitable Islamic bank, but it has emerged as the most profitable bank in the country. So when we look at the success of the Islamic finance industry, now this has now become a source of meaning for many participants, that Islamic finance industry has emerged as a successful model. While it has emerged as a successful model in terms of meeting the market test, there we also see a loss in meaning, because the Islamic finance industry, this particular form of meaning, which was available to the earlier participants in terms of the fact that Islamic finance industry would reduce social inequity, this meaning is lost in the current practices of Islamic finance. While it generates one meaning in terms of emerging as a successful model, it loses one meaning in terms of the loss in social inequity, which is Maqasidul Sharia strongly propagated and which was available to the early generation of Islamic finance scholars. In this article, we also talk about that there is another space of meaning which is completely missing and which has not been explored. All the sources of meaning that I've just talked about, it ignores the subject. It assumes as if the meaning is generated externally. So either it's a practice or a consequence or that generates meaning. But if you look closely into the essence of Islamic ethics, the subject is very important. So the subject is the place where meaning is generated as well. So hence, in this article, we also explored the space where it's the subject which gives meaning to the practices and which gives meaning to the consequences rather than the other way around. And in this journal, hopefully, we would like to explore the space where the subject as the creator of meaning becomes as important as the practices or the consequences that are followed. So with that, I would again like to thank the world scientific community for accepting this journal. It's a great opportunity for all of us. A lot of the brain power that I see being involved in this journal is excellent. I think these are the group of scholars that I see are excellent, and hopefully with all of them coming together, I think we should be able to make significant impact through this platform. With that, I'm really grateful to all of you for listening. Thanks. So, yeah.
What is a bond? So here's a bond for you. Okay, there's a lot of symbols here, but they're actually quite simple. The bond is issued at time t0, say today, and matures, say, 5 years from now. In the meantime, every 6 months, you get a coupon. So the coupons are dots. Those are the times in the future that you're getting payment. Now, how do you represent that? It's very simple. Look at this B, which is the coupon bond. The C1 times L. L is the value of the bond, say $1 billion. C1 is the interest rate. Why do I have a Z there? I'll explain it to you in a minute. First payment C1, second payment C2, the C1, C2 is linked to T1, T2, so on and so forth. Now, why do I have a Z there? Because this payment is going to be made in the future at time T1. Now, if I put this money in the bank today, it would compound and would increase the value. So the payment in the future must be discounted to the present day. Its value is less because if I pay you $1 million a year from now, its value today is maybe 900,000. So you have to do discount. So now if you have 30-year bond, Europeans have a 100-year bond, you need 100 terms on the slide. Can't even accommodate them. So you have a notation. The summation means I write out this expression n times. That's all it means. Okay, so don't be put off by the mathematics. Without math, there is no finance. Finance is cash flows. Cash flows are quantitative, numerical quantities. And unless you have a model telling you what the cash flows are, you're just guessing. You're doing some arithmetic in a village. Any bond worth $1 billion with cash flows needs mathematics. And I will show you as it goes on. So the whole point of this presentation is to tell you we have mathematical solution with Islamic finance. It's not just wishful thinking. Next, please. Okay, before we go, can I go back just a second? So two things are happening. Look at the C1, L1 is the interest you have on the bond with value L, $1 billion. And the discounting is, again, interest rate, right? Because if I put something in the bank today, it compounds based on interest rate. So discounting also requires interest rate. So both the C1, L1, the payment you get, and the discounting is based on interest rate. And they expressed in the bond in the summation. So to keep that in mind, interest rate, everywhere interest rate. Okay, next, please. So the main difference between the coupon bond that I showed in the Sukuk is that C1, L1, this quantity that you get as a return is not fixed. It depends on the performance of the issuer. If the issuer is making a lot of money, you get a higher coupon. If the issuer is losing money, you get a less coupon. That's called risk sharing. The second thing is that the discounting is being done using interest rate, also not allowed. The discounting should be done based on the risk profile of the issuer. Issuer may not be able to pay you the bonds, may not pay you the coupon. So then there's a risk of the guy defaulting on the coupons. That comes into the discounting. So both profit sharing, which is the coupon, discounting, risk, are synthesized in the Sukuk. It's much more complicated than a conventional bond. I'll show you models for this. Next, please. Now, Prof. Saad talked about deontology and what Sharia board is doing. Let me show you what they're doing to tell you what's the problem. Okay, so this Sukuk was issued by a well-known bank in Malaysia, 4.5% coupon semi-annually, was made into a Sharia compliant instrument. You can say, well, how did they do that? Well, this is how they did that. That diagram you have is some obscure flow chart they have that with the money I've raised, I'll buy a commodity on paper, sell it to a third party, who will give the money to a fourth party, fifth party. In the end, this whole diagram means 4.5% fixed coupon. That's what we call in gharar. It's completely opaque and non-transparent. It's completely forbidden by Maqsad Sharia. Cannot do this. And what are they doing? They're saying, look, with the previous speaker said that difficult to grasp, so-called deontology means the following. Every link in this diagram is Sharia compliant. So you look at the diagram, every link, yes, I bought a commodity, I had some risk, I sold it, I did this, I did that. In the end, what happened? In the end, you have 4.5% coupon. That's where the whole Sharia board's play is today. And they won't like it. I'm saying this, but this is the truth. Okay, so, and then, I have some quotation here from some famous, in the Gulf states issued Sukuk. And this organization, which is ranking the Sukuk, they declared 85% of the Sukuk were not Sharia compliant because they can see through this opaque veil that is put on the actual transaction. So this is what we are faced with, okay? Next, please. So we need a mathematical model which basically allows the coupons to vary with the profit and loss of the issuer. I will demonstrate this by creating two mathematical models for you. And these are in the journal. That's why we have our papers there, not because we want to publish there, but because if we don't put our reputation in the journal, why will other people publish there? Obviously, we have to think this journal is good enough for us. So we invite others to also participate. So let me show you the instruments. Next, please. So this is what a profit sharing sukuk looks like. There are many sukuks. Ijara sukuk is there, profit sharing sukuk is there, but let me focus on this. This structure looks very similar to a bond, but they're fundamentally different. Alpha here, which is the first coefficient, is based on the performance of the issuer. It's based on profit and loss. The discounting R I have for risk is based on the risk profile of the issuer. So you have risk, which is a separate entity from profit. The separate, because a guy issues a bond, he defaults. The defaulting is the risk. It's not linked to the payment of the coupon. Coupon is being paid based on the performance of the issuer. Two separate, entirely separate issues going on here. So then you can see a sukuk synthesizes profit sharing and risk sharing. Okay, and it's a very beautiful instrument because the model, these are complicated mathematical questions. So I will do the following. I'll do in two steps. I'll do first a sukuk in which R, which is risk profile of the issuer, is removed. We'll assume it has no risk. The second one will have both risk and profit sharing. So let's go step by step. Next, please. So I take Petronas. Okay, now problem with profit sharing is that the profit is declared by the board of directors who only know their account books. So as an investor, I'm not sure the profit really is profit. They may have taken out money for the private holidays, for the cars, what have you, and they say, okay, here's the profit. Actually, they siphon off the profit in 101 ways. So for the sake of information symmetry, what I took is I took the Petronas, whose main revenue source is oil. So I said, look, if the oil price goes up, Petronas is making profit. If the oil price falls, Petronas is going to make a loss. So oil has become a proxy for the profit and loss of Petronas. So any mining company or company which has a well-defined source of profit, which is publicly listed index, we can use this model. So then I said, look, we'll make the coupons depend on the oil price. Next slide, please. So this is how one does it. Forget about the symbols. What this says is the following. Look at the diagram. Diagrams, the payoff is the coupon. Diagram says if S, which is price of oil, goes up, the coupon goes up. If it falls, the coupon falls. The K1 is a floor meaning that you assure the investor, okay, you get 2%, whatever happens. You can make the floor negative also. It's up to you. And the ceiling is to protect the issuer. If he's having a really good run, he doesn't want to give you 15% on the bond. You should cut him off at 9, 10%. So these are up to you how you model it. Okay, these are just an example for you. So this is how the coupon varies. Oil price goes up, coupon goes up. Oil price falls, coupon falls. Next, please. So here I show you the real price of oil, and there's a very interesting example. It's a real example. The red dashed line on the right-hand side is the fixed coupon. The Petronas issued in 2009 $1 billion sukuk, and it was at 5.25% fixed coupon. If you look at the graph, 2009 is the dip of the price of oil. Okay, so when they issued it, the coupon should be very low. But as the price of oil goes up, if you look at the right-hand side, those circles and blue dots are the coupon values. As the price goes up, I've plotted this, the coupon goes up. Then you hit the ceiling, the coupon has a ceiling. The price of the oil falls, the coupon falls. So this is reflecting profit sharing, no risk sharing yet, profit sharing. Petronas makes more money, gives you more coupon value. Oil price falls, reduce the coupon. I've given these, this is our paper in the forthcoming journal. So this is coupon. We can also do something else. Next slide, please. You can talk about the future price of oil. This is World Bank prediction. Then based on this, you can say, okay, if I issue a sukuk today based on profit sharing, what will happen to my coupon? So we plotted that. If coupons go up because the price is going up, then you hit the ceiling. Now, if you look at the cash flow of the issuer, that means how much money he gets from oil and how much gives out in the coupon, is perfectly hedged. Look at the blue dots, there's zero. That means he doesn't give anything in his pocket, the third graph in the lower level. And then it goes a little bit up and up and up. In other words, there's no loss for the issuer because the price of oil went up. If it fell, of course, then he has to he'll be out of pocket, right? He has to give you money from his pocket. So this is a simple coupon based on profit sharing. Next slide, please. Next slide is more complicated. I want to show you this, not because you're a mathematician. to tell you this is the kind of mathematics involved, okay? It is not a walk in the park, okay? You have to solve this equation. So Sukuk now is depending on the valuation of the company. The valuation reflects the profile of the company, including the likelihood of default, likelihood that he'll default on coupon payment, risk. Valuation of the company encodes risk and also encodes his profit and loss. So I made a model where the coupons are paid based on the valuation of the company, and the discounting is done also based on valuation of the company. The full-fledged sukuk, both risk sharing, profit sharing. You solve this equation. I have my reference here. I put the word, this in the title, quantum oscillator, to remind you, you need quantum mathematics for solving this equation. This is not your simple, some stochastic calculus or econometrics of economics. This is totally different mathematics involved here. But nothing simple will do. Okay, so here is the next slide, please. So just to make you think clear, Sukuk is there. I don't expect you to know the equations, but I want you to see the complexity of the equation. So you have, something exponential, the P itself is exponential of exponentials. So this is a formula you can never guess in a lifetime. There's no guesswork involved. You can say, well, who cares about this formula? What value does it have? So let's test it. You can say, how can you test it? Because Sukuk don't exist in the market according to you. No, they don't. But what exists in the market is risky coupon bonds on the New York Stock Exchange. And you'd be surprised to know they exactly are following the principle of Islamic finance. Next slide, please. So our empirical test. So we'll test it to see if they know about this. Since the coupons are fixed, right? The price of the bond will reflect the model because coupons are fixed for New York Stock Exchange. That's the companies we examine. So if there's a variation in the actual valuation in the price of the bond, it has to be done through the price of the bond. So let's go to the next slide, please. We did 45 cases. So look at the pink. The pink here is the valuation of the company. The black line here is the value of the bond. So we take the pink line, we put it into a formula, then we get the lower line. We get 90% accuracy in our prediction of the market's behavior. Okay. And look at the two. There's no simple relationship between the pink line and the black line. And there's no curve fitting. There's only one parameter here, omega. Everything else is locked in. So market base, basically risk and profit sharing without knowing it. You know why? The market knows which company is doing badly. The market knows which company is making profit. The market knows everything by trading. These are highly traded liquid. This is Johnson & Johnson. Next slide, please. Then I did Apple. Again, remarkable fit. 76% because there's some anomalies happen. So when we did our long paper, 45 instruments, 45 bonds, we classified them highly liquid, AAA rating, not liquid, bad rating, and they have different behavior. Next, please. And so for Google also, it's a very expensive bond. Next, please. Oh, just go one step, previous slide. Yeah. Google also, interestingly for Google is that the bond coupon was 1.998% is the coupon. But if you take the average of the stochastic bond of the Sukuk is 1.94%. It's almost exactly the same. The average of the fluctuating coupon based on profit sharing is what the market actually is offering you. Next, please. Okay, so here's my summary. The main objective of the journal is to encourage and support groundbreaking research and provide solutions to what we are saying is the outstanding problems of Islamic finance. One of the journal's aims is to have mathematical Islamic finance so that we have quantitative solutions to what initially I pointed out, the lack of risk and profit sharing instruments. And I showed you two examples of Sukuk, which can actually exemplify what we mean by solution. It's not some wishful thinking, it's not a sort of a hope. Actually, mathematics exists. The problem is the market, the issuers, the investors will not accept this because they don't have the education and the confidence. The Islamic financial instruments are proper instruments that they can invest their money in. Thank you.
Okay, thank you, Prof. Belal. Okay, we now open the floor to question and answer. So we have any questions regarding the journal? Yeah, the EIC will be gladly to answer. Anyone? Not one, right? Anything you want to know about Islamic finance? Any question?
So after you have this solution, how will you get the Islamic finance use this?
Application. How to apply?
We feel the Islamic finance is going to benefit from these instruments, but somebody has to make the breakthrough.
Prof, my question is for people to accept these ideas. This looks like very abstract ideas. We used to just retail, putting our money in the bank. That's all what we know. We don't really have idea for us to tie up between the real economy and the finance and all that. We are not educated in terms of that in order to understand that. So people will accept such a mathematical combination abstractions of everything. Therefore, maybe they have that some sort like resistance and all that. I'm not sure. Of course, when we read the literature in the fiqh, so Rasulullah said about arribawiyats, the commodities that the food security. Can people understand from this kind of abstractions that actually could put is
So,
there?
if I may understand your question, so if you invest in an account, we'd like to know that this money is being going towards what we think is the right place to invest the money, be it food security or be it the real economy, right? Okay, so that's actually now quite easily addressable because with financial technology, if you invest in a fund, they can actually track where the money goes, who gets the money, and what's happening with the money. So that has been actually already addressed, and for social finance, that's quite successful because for poverty alleviation, people really want to know where is the money going. Is it going to a madrasa? Is it going to an orphanage? So I think these there are a lot of startups with that actually who track the money.
Okay, we have one. Okay, this is not related to the journal, but could Islamic finance have mitigated any of the recent issues in context with the SVB, Signature Bank, or Credit Suisse, the recent meltdown of the two banks? Islamic finance. Yeah.
Prof, pass the difficult question to me. Maybe I can relate to the first article that I wrote with Saad. If you look at Islamic finance, we are actually trying to address four things. The first one is speculations. Second one is excessive leverage. The third one is actually activities are not contributing to common good. And then, of course, the fourth one is addressing the monetary system itself. I think people who follow the collapse of Silicon Valley Bank probably know that the collapse is also contributed to excess liquidity in the market. So they were not able to give financing, and they actually end up putting in risk-free securities. And when the interest rate starts going up, the value of the papers start declining, and eventually they had what we call as the liquidity crunch. So the system moved from one extreme to the other extreme quite quickly, quite rapidly. Okay. So because there is no linkage between the financial or system and the real economy, the real linkage. So what we are trying to say here is that in Islamic finance, you need to bring back to the fundamentals to really link between the financial performance and the real performance. I mean, this is a very funny story, and I have to tell you this. During COVID, stock market went up. Nobody's working, but stock market went up. After COVID, everyone works, stock market comes down. Right? So if you really analyze it, it seems that from the conventional perspective, there is a strong disconnection between fundamentals and the performance of the financial market. So we want to bring it back. Okay. Maybe finance is going to become a bit boring. Maybe you'll take a back step and say, we'll support the real economy. But we want to bring some form of rationality. So now to answer the questions, it's very hard to say when you're only 2% that Islamic finance can actually prevent. But theoretically, if you're able to do all this and relink the connection between fundamental and the financial market, you can actually avoid many things. Just last point before we conclude. Majority of the new credit that being created, especially in America, almost 99% goes to financing either property market or stock market. Only 1% is actually going to the real assets. And this is the cause of what we call as a very volatile market. And that volatility actually creating so much of uneasiness to the real people like us. Inflations, our salary wiped out. Recession, our job got wiped out. So either way, we are the one who paying the price. But the one who actually benefiting from the system, making money during bad time, or even losing money, making money during bad time as well. And I'm sure this collapse of Silicon Valley will actually enrich quite a substantial amount of speculators and hedge fund as well. Because that's the beauty about the finance. Upside, you can make money. Downside also, we can make money. So to answer the question, yes, we do believe that, but it's still, a theory. And hopefully we will have enough data to prove it very soon, inshallah. Thank you.
Thank you. Thank you. Okay, we have one question. What are your views for using derivatives in Islamic finance?
Yeah, I can also, there's the verse in the Quran which says you should safeguard your wealth. So the thing with derivatives, you can do speculation, which is based on your intention, or you can use derivatives for hedging. Derivatives are a very interesting and important feature. So if you take a stock and if you say to a call option, you're short on a call option, the stock goes up, the call option goes down. It's exactly negatively correlated. So if you want to hedge a portfolio, you obviously want things which are negatively correlated. So which one goes up, the other goes down. So net result is zero. So for hedging, there's no instrument better than an option. The problem with the option is that you can also use it for speculation. So you can make, 100% profit because you take a position and it goes up. The value of the option is 10% of the equity. Say you take an option on $100 stock, the value of the option is $5. But if you make $2 and $5, a huge amount of profit you're making. So the option allows you for speculation, also allows you for hedging. So in my view, hedging is absolutely essential for portfolio management. And derivatives is a debate among Islamic scholars, but most of them feel that if you have the right use of derivatives, it should be allowed.
Okay, thank you. I think we have one
Can I add
last
something?
question from our online viewers. Should we move from being Sharia compliant to being Sharia based to derive the real essence and the benefit of Islamic finance?
No, I think in short, that's what this journal is all about, because we want to really promote resharing instruments. Prof. Belal presentation is one of the example of a resharing instruments. I know a lot of people out there are skeptical. The ecosystem seems to be against resharing, especially when it comes to fixed income. But again, what is life without challenge? So this is a new step, a baby step towards more resharing instruments. And I think sooner or later, people will see the positive things about Islamic finance too. As I said in my presentation, The proof will happen when you can see we are moving from volatile, uncertain, chaotic world to much more stable, resilient, and progressive for everyone. So that will happen. So thank you so much.
We have one question.
Thank you. I'm Zainal Abidin Rashid. I have a question for the editors. But before that, let me use this opportunity to also share the sentiment that one of the reasons why I'm here is actually to show the support, of course, to the chief editors who have put in a lot of effort for a worthy cause. And equally important is actually the support shown by Dr. Phua and World Scientific. In fact, if I may just go back a bit with your indulgence, the two books which were produced by World Scientific, one about when Singapore celebrated 50th anniversary, it was a national project, but we took the effort to show the role of the Malay Muslims in Singapore. And who supported us? World Scientific in publishing that book. And when Singapore celebrated the bicentennial, the coming of Raffles, Singapore also celebrated 200 years of Singapore. And we also did a book called Beyond Bicentennial to remind Singapore that Singapore is not just about Raffles, the coming of Raffles, but Singapore was there and was a prosperous place even before Raffles, beyond bicentennial. And that's where the role of actually the Malay Muslim world, the Nusantara. So coming back to this book, my question is actually related to this, the support of non-Muslims in Islamic finance. I come from the East, I live in Kembangan, but I come all the way to the West, World Scientific, to show support. And but I think Islamic finance is more than just about East and West, because the values, the Islamic values, humanities, which I think is worth supporting, and is supported even beyond the Muslims, right? Because the values that we represent, Islamic values, are also universal values. So the question I have in mind is, from your experience, do you see this understanding from the non-Muslim world? Do you see, for example, the banking, the Western banking world? How do they see Islamic finance? They've seen the worst of their Western values, Western experiences, like what we're having now in terms of the Credit Suisse and the financial crisis. No? So how do you see this going forward? How do we attract the non-Muslims even to see the values, the universal values of Islam, Islamic values, and Islamic finance? Thank you.
Difficult and important question. You know, London has declared itself with the ambition of being the center of world Islamic finance. So it's not that the West is not aware of this. And London sees this as a market opportunity, which is nothing wrong with that, okay? I mean, in fact, in Malaysia, banks owned by the Chinese are the principal issuers of Sukuk, incidentally. So there's no issue that if the instrument is worthwhile, everyone will subscribe to it. So first is our excellence. If we have excellent instruments which are actually worthy of support from hedging or from the point of view of fair play and justice, it'll attract people. The UN, sustainable goals, they have actually acclaimed Islamic finance as one of their, features, because fair play and justice is universally upheld. And from the very beginning, the one word which repeats itself in Islamic finance is fair play and justice. There's no element that you must believe in the Almighty to subscribe to fair play and justice. This is a universal value. So I think once our instruments are successful, then our value system will become more widely acknowledged. But if you put a value system first, then they'll say, are you really serious? What does it mean? You're just empty talk. You're just trying to sell something. So we need instruments which are outstanding. And that is where the Western economic system has been so powerful. Because if you look at the debt market, it's about $250 trillion. hitting almost 3 trillion now because of COVID. They've printed money like there's no tomorrow, all supported by their underlying mathematics. So we have to first do our homework. Then our values, of course, are supporting our homework. Our whole system of Sukuk, for example, is based on fair play. Lack of transparency is forbidden. Investor and investee both must get equal share of the both loss and profit, which is sharing the risk and so on. So inshallah, as you know, we say, if we are successful with our homework, and if we produce some quality instruments, then we can go to the world and say, look, we have value to add. And then hopefully there will be a response to that, Your Excellency.
Thank you, Prof. Belal.
Okay.
May I just add, in fact, in my 50 years of actually working with the Malay Muslim community, the Muslim world, one of the things I always dream of is to see a model coming from a multiracial, multi-religious society. I mean, you can have the best of an Arab world, for example, 100% Muslims, or even Pakistan, maybe, if they come out as a model. Then the rest of the world will say, yeah, you are Muslim, all Muslims. But that's why I always look to Malaysia. When I was looking for this model for the world, I would turn to Malaysia because Malaysia is multiracial, multi-religious. And if Malaysia can prove itself to be a model of success, whether economics, whether it's social issues, whether it's education, then I'll be very proud to say that it is a workable system in the world context. That's why I want to comment. Please.
Okay. I mean, it's hard when I need to speak about Malaysia, but maybe I just start with my experience in Qatar, especially this World Cup. A lot of people say that, you can't have a World Cup without all these things. But then it turned out to be one of the best World Cup ever in terms of the organizations. And obviously, you probably know the final as well. Probably one of the best, and people are still talking about it. So I think I just want to echo what Prof. Belal said. You prove first, then people will embrace your concepts. Today, it's hard to embrace Islamic concepts because whenever you go, you see problems in the Muslim world. And we're still contributing between 7 to 10% of the world GDP. Because economy comes first, finance comes later. But when you try to put finance first, without the support of economics, then the linkage will not support Islamic finance. Because that is our main value proposition, is to show that finance is actually related to economy. But having said that, there is a hope. I live in Qatar. I can see so much of activity and initiative that are taking place to really promote the values. And also in Malaysia too. So just to answer the questions, the beauty about Malaysian model is that although we have so many problems, right? Despite all that problems, we are still growing at 5%. Our export is still hitting more than 2 trillions every year. So we are still okay in that sense. So the point is that, we always try to approach from a practical perspective, right? So practicality gives value, and value gives us a say, and that say carries us further, okay? But unfortunately, in the many Muslim world, they are more rhetoric. I think this is where I think we have to be more pragmatic with our approach and use it with more sanity and rationality instead of just being emotional and passionate without having proper substance. So a lot of people say, can you price Sukuk without really fixing it? But Prof. Belal have shown it. You can do it. So if you have the tools, there's no end to what you can contribute. So we are hopeful, and inshallah together, I think we all can make a difference. Thank you.
Okay. Do you have any last? Okay, with that, Alhamdulillah, that concludes the ceremony. Okay, let's close the ceremony with the recitation of the Al-Fatiha. Al-Fatiha. Okay, with that, I would like to now invite everyone for tea session.
Tea session.
If we have tea session, there's a coffee machine.